Ladies and gentlemen, back to business. Our next panel explores the cutting-edge world of fintech and its impact on finance. Exciting time ahead. Please welcome on the stage ESMA Senior Risk Analysis Officer and Choné. You can applause, please. Wise Banking and Expansion Lead in Europe, Mathilde Janfils. Digital Finance Unit, DG Financial Stability, Financial Service and CMU European Commission Deputy Head, Mattias Levin. Do we have? He's not here? Okay. Yeah. EIOPA, Head of Digital Transformation Unit, Dr. Tim Shakesby. Okay. Amazon Web Service, Public Policy and Regulatory Affairs, EMEA, Head of Finance Service, Maria E. Tsani. Welcome. And our moderator, Better Finance Research and Policy Officer, Martin Molko.
You should have called Revolut also. There's a little problem, but here. So, yes, please. Yes.
Okay. So the chairman of the board, Revolut Securities Europe, CEO, Rolandas Juteika. Welcome.
Sorry, no Juteika. Well, thank you very much. And thank you to the panelists joining also remotely and on site. I'm very happy to host this panel. There's a lot to talk about when it comes to fintech, digital transformation, and new technologies. So we will only focus on all we can cover. So to narrow it down, I would like to give a short introduction to fintech, in my view. So digitalization is also democratized access to finance. And fintech was seen as a disruptor at the beginnings. So service that compete with traditional models, creating new competitive business models. And in essence, fintechs are cross-border. And this is a big topic we'll cover today. So innovative trends and solutions are exported. Either they come from outside the EU, they get established, or they are innovating in the EU and operate cross-border and touch wide base of financial services users and investors. So we'll explore those fintechs. We have Wise with us and Revolut to talk about their business. I'm very happy to host you. So the digital transformation is therefore reshaping competition. And the integration of traditional banking with innovative fintech solution is also a topic. We'll also focus on technological innovation. So to name a few, AI, and also DLT, potentially transforming capital markets, how securities are offered on the digital landscape. And we'll also discuss how to balance those technological benefits with the associated market risks. So for this, we have a regulator, we have ESMA with us. So I thank you for your presence, and Choné. And we have also the regulatory challenges with the market dynamics that fintechs bring to us. So this, for this, I thank Mattias, Levin, and also EIOPA team Shakesby for being present remotely. The structure of the panel will be the introduction. We'll start with the introduction of the European Commission Digital Financial of the European Commission DG FISMA Digital Finance Strategy Unit by Mattias Levin. We'll introduce the digital finance package, which is quite advanced now in the legislative process. We'll have those discussion on transformation and consumer empowerment and key insights, of course, from Wise, Revolut. Amazon Web Service for the infrastructure they provide also to fintechs. And we'll hope to have a Q&A and engage with everyone in the audience and online. So without further ado, Mattias, I thank you, and I'll let you take the floor to present the Commission works and the legislative work you've been upholding. Thank you.
Okay, thank you very much, Martin. Can you hear me?
We hear you very well.
Perfect. Well, thanks a lot for that kind introduction. Good morning to everybody, and apologies for not being there with you in person, but very grateful that you're allowing us to intervene virtually. So indeed, I'll very briefly kind of provide a little bit of background and rationale where we came from and what has guided our action during these last 4 years, and perhaps a little bit how we see things going a little bit in the coming years as well. And this is where we're coming from. Is really that when we start to look at the kind of process of technological change, if not kind of a transforming financial system, we really saw that the kind of core functions that the financial system perform, in be it kind of payments, bringing funds together, transfer resources through time, or to kind of manage the uncertainty, price information, etc. All these kind of core functions are really, of course, have always been influenced by technology. They tend to evolve in time, but the pace of that development and the depth of those technological developments have really substantially increased in the last decade, and have kind of also gained further traction, as you would all agree, in the last few years, especially since the pandemic as well, which kind of brought us to another kind of quantitative leap. So we kind of see really kind of new products emerging in the market. For example, crypto assets. We see new services coming in the wake of these kind of products coming on the market. For example, digital wallets. We also see kind of new ways of delivering and distributing services and products. For example, platforms. We also kind of see from a consumer perspective a new ways of consuming financial services, where of course we all sit here with the mobiles these days, and that kind of also changes the way that we kind of access and kind of consume, if you want to put that word on it, the services that financial entities provide. And we also see kind of structural changes as a result of all that to the kind of way financial services are kind of provided, the kind of longer value chains, which are certainly more efficient, but also a little bit more complex. And we also see kind of the entry of kind of new entities in the kind of financial ecosystem painted large, which perhaps so far have not really been at the front and center of finance, but which come in by virtue of them providing technology, or by kind of operating in that kind of gray zone between financial and technology, fintechs, big techs, you name it, etc. So a lot of kind of changes going on, and of course that brings a lot of question for us, the Commission, as kind of the guardian of the treaties and the kind of the ones who are kind of managing the financial regulation that's supposed to kind of underpin the European financial services. So the question for us was then, what does all these changes mean for financial services policy? Is our kind of existing regulation and supervision still fit for purpose? And that's the kind of starting question that we asked ourselves. And then the objectives we wanted to achieve is really kind of make sure that all the opportunities that these kind of new changes may kind of present for consumers and firms, that we try to really capture these, while at the same time we try to address the risks that may come with all these changes as well. New products that are not within regulation, new services that have not really been catered for in existing regulation, etc., etc. But with a purpose really to kind of enable people and firms to kind of reap the benefits that these changes may bring in terms of, for example, better, cheaper products and services. So that's really what kind of underpinned our strategy, which for you have a good memory. This was adopted in kind of 2020, had kind of 4 overarching strategic priorities that we thought should guide the Commission's action since then. And the first kind of priority was to kind of really tackle fragmentation in the digital single market. We have for years been kind of focused on the single market at large, kind of tearing down the barriers to the freedom to provide services across the border, to move across the border, to move capital across the border, to set up shop across the border. The digitalization brings certain kind of new potential barriers. It also makes things easier in a certain respect, but to really look at that and kind of try to see whether further action is needed to kind of really make a digital single market work. A second priority was kind of more linked to what I said immediately before, which was kind of really looking at our at the acquis, at the kind of existing body of EU financial services legislation, to ask ourselves the question: does this body of legislation kind of properly address the new kind of financial system we see being kind of sketched out as a result of the process of digital transformation. A third priority was to kind of then look at data in particular, because data is really underpinning financial services increasingly. And here we really want to kind of tap into kind of a broader trend of kind of trying to make it easier to share and access data under certain conditions, to kind of really work on that in the financial services area. And the fourth and final area was also then kind of to really kind of balance the realization of opportunities that may come from digitalization by also kind of really working on addressing the new challenges and risks. So today, obviously, I will not kind of comprehensively go through all that we've done in this area, and I'm just kind of have a few kind of headline items, and I'm sure the panel will kind of revert to some of these items during its discussion, but just to kind of do a little bit of a kind of a snapshot overview. So on the first priority, the digital single market, a lot of action happened earlier in this mandate, where we kind of, with help of also other people from the Commission, really try to look at how we can make it easier for kind of consumers to tap opportunities across the digital single market, and also make it easier for firms to kind of remotely onboard customers in other member states. And here a lot of focus has gone into kind of digital ideas, which work very well in the national context, but which don't work smoothly so far in the kind of across the European single market. And there has been a lot of policy action to try to remedy this, and this is kind of now being implemented. When it comes to the second priority, kind of taking a close look at a kind of existing regulatory framework, I think here the key action that we've done is the kind of the crypto assets type of new product with new services, where we, with MiCA, has kind of provided a new kind of bespoke regulatory framework that bring these so far unregulated issuers and service providers of crypto assets into the regulatory and supervisory fold. And that is now clearly in kind of the implementation phase, with a lot of kind of focus outside and the kind of supervisory community side to get all the technical rules into place before the framework starts to apply, partly as of next month, fully by the end of the year. And as regards to the fourth priority, how to address risks, here perhaps I would like to mention in particular DORA, the operational resilience, which is in a sense our effort, our ambition to kind of try to match financial entities' increasing dependence on technology for the provision of financial services, with also an increased ability to withstand any problems that they may have with that kind of technology, and also to bring certain critical third-party providers of ICT tech services into some kind of oversight by the ESAs. Just like MiCA, this is now clearly in an implementation phase. DORA will start to apply as of January next year, and for the time being, it's really kind of focused also here to kind of get the new oversight function up and running, to get all the complementary technical rules in place, to ensure that those stakeholders who are supposed to implement the rules have all the information they need, and that they can start from day one. So that's kind of on these priorities. Let me perhaps say a little bit more on the kind of data point, because that's probably the area where negotiations in a sense are still ongoing. And as I said before, data increasingly underpin financial services. We believe it will become a basis for a lot providing new services, products as well, also with the help of AI. And it's therefore essential that the data that one accesses is available, but also reliable and of good quality. So kind of key policy priorities that have guided us so far is kind of promoting access to data in controlled ways. And that has involved both legislative action, non-legislative actions, such as the kind of data hub we put up under our so-called digital finance platform, which is a kind of a hub which we now increasingly populating with kind of synthetic data that replicate certain kind of supervisory data sets, with the ambition to kind of provide these data sets to innovative firms who want to test new products, but also to researchers who want to kind of take stock of market developments on the basis of kind of data that is of good quality. So that's non-legislative action. But we also have legislative action. As you know, we had tabled a proposal last year on promoting access to customers' financial data, FIDA, in legislative terms, where negotiations are ongoing in order to kind of enable that access to third-party providers that can then provide innovative services. Of course, all that is providing kind of access to data, and the question then is what happens with that data. And of course, we also see that a big development in data these days is, of course, also artificial intelligence, where we have now enormous market developments ongoing. We also have a big new framework, the AI Act, that has just been approved, that will soon be kind of published, and that will start to apply relatively shortly as well. And that will kind of provide a foundation for ensuring fundamental rights of people when exposed to kind of artificial intelligence systems that provide services to them. There is a strong kind of financial services link in there, in the sense that some services, AI systems may govern your people's access to certain kind of fundamental or essential services, such as access to credit and access to certain kind of life and health insurance contracts. And therefore, finance will have to check into that. And that is an important part now in getting that up and running. And from our perspective, we will also kind of further dig into this to kind of try to gauge the broader uptake of AI in finance, and also ask stakeholders whether there's a kind of a further need for guidance in this respect in order to kind of provide certainty and clarity about the rules that apply. So here we are likely to kind of launch consultations with stakeholders relatively shortly. So coming to a close, and soon over to you again, Martin. I've tried to provide a little bit of an overview of what how we've seen digitalization kind of affecting the financial services sector, and what we believe that entails in terms of policy. So as I said, we think that the kind of digital transformation, while it builds on prior technological changes, the current changes we're going through are really unprecedented in depth and in scope. It presents both significant opportunities as well as risks, and has also significant implications for policies. How we maintain the single market relevant also in the digital age, how we ensure that our rules remain fit for purpose, and how we harness the kind of real potential that comes from data sharing while addressing potential risks, and also how we kind of work with the kind of changing nature of the financial services ecosystem and the landscape to try to ensure that the perimeter of financial regulation remains relevant. So that has been a kind of significant policy priority of this Commission, and I think it is safe to say that given the ongoing nature of these changes, it will also likely remain a priority during the next Commission's mandate as well. But with that, over to you, Martin, and thanks a lot.
Thank you very much, Matthias, for providing the background of our discussion, really, so, and why the European Commission works on those legislations, and potentially now to see whether further work is needed, or what innovation should still be looked at. But to start, I would like simply to talk about digital innovation and fintech models. I would give the floor to Mathilde Janfils from WISE. So how do you see WISE as a fintech collaborating actually with a traditional bank, but still creating competition in that extent? The main innovation of your models, and also, if I may, how the Baltics, since we are here to talk about the Baltics, are conducive to the scaling up of fintechs. So over to you.
Yeah, thank you, Martin. So it's quite a lot there. So let me just take it like point by point, maybe. So first of all, yeah, my name is Mathilde. I work at WISE. WISE is a global technology company, and we are specializing in cross-border payments. Our mission is money without border, and our vision is to build the best way to move and manage money around the world in a way that brings maximum ease, minimum fees, and at full speed to our customers. So if I maybe start from, our key products and what are actually the things that we offer to our customers, I would talk about three things. So we have three main products that we offer at WISE. So there is the WISE account, WISE business, and then WISE platform. So the WISE account is our multi-currency account offering, where we basically allow customers to send money, receive money, hold and manage their money, but also spend money with a card in different currencies. WISE business is a similar product. So it's the WISE account, but it is enhanced with business-specific features. And then WISE platform is basically a service that we offer to banks and non-banks that want to connect into our rails in order to process their payments. And I can come back to this in a moment around the way in which we collaborate with traditional banks. So basically, when we started Wise, our main product was Wise Transfer, which we used to call Send Money, which is a classic remittance type of products. And over time, we've seen that basically there are other needs that we can solve for our customers in the area of cross-border payments. And as we have basically developed the world's first truly international account, we've seen that we had more and more customers using us, and basically by the same token, also more and more customers holding money with us. And earlier this year, we had over 13 billion euros of money that we were holding on behalf of our customers worldwide. And so one thing that's really important for us, and in the context of this conference, but also in the context of my work, is to make sure that we reward these customers for the money that they hold with us, and that we give them a fair return. So we want to thank them for their loyalty, we want to thank them for their trust, and it's therefore important to give them a return. And especially if you think about the context of the current interest rate. And something that we've talked quite a bit about this morning is around money sitting around a bank's accounts. So a big problem that we have identified is that traditional banks aren't actually passing on the higher interest rates to deposit holders. And that's the case in the UK, for example, where I live currently, where the Bank of England's rate hasn't been passed on to deposit holders, but it's also the case, and we talked about this earlier, in Belgium, in my home country, where the government even had to step in and create a government bond to provide some competition to the bank. So there's definitely work to do there. And so we wanted to solve this issue and create something different. And I want to talk a little bit about our Wise Interest product before I go deeper into the other questions. So Wise Interest is a product that I work on. It's the latest addition to the Wise account. And it's basically a feature where we allow our customers that have euros, pounds, and US dollars with us to earn a return on this money that they have sitting on their account by investing it in a money market fund. So they get a market-leading return on these three currencies. That return is in line with the central bank's rates. And what's really innovative about this product is that they actually are able to keep using the money as if the money was in cash in their account. So we give them truly instant access to their money. So you can have your balance, which is like the equivalent of your current account, invested in a euro money market fund. You see a return in your account every day, and you can walk to the supermarket, spend €5 directly from your balance, and that will actually come from your investment. So it's basically a new generation of current accounts where customers don't have to lock their money away, they don't have any restrictions, and they are able to benefit from the current rate environment, which I think is really innovative. And today it's available in 12 European countries, and my aim is to have it in all European countries, and we can talk about the challenge around passporting and having a truly European investment playing field in a moment, but we want to be available everywhere in Europe. So that's a little bit about our product. In terms of how we work with banks together, so I was mentioning Wise Platform earlier, which is really the service where we partner with banks. And I say partner because I think at Wise we like to think about incumbents as, peers, like not necessarily as, competitors or necessarily the enemies, or it's often portrayed in like the public debates, like banks versus fintechs. I think for us it's really around, we have a lot to teach to each other, and there is so much value that we can provide if we were to actually work together, because often we have like, we want to achieve similar outcomes. And so if we could partner and work together, we can bring better value to customers. And so with Wise Platform, we basically allow traditional banks, for example, to plug into our network and actually offer cheap, convenient, and transparent payment to their customers by just using our payments rail. And the backstory to this product is a Hungarian bank that was losing a lot of their customers to Wise because they had, cross-border payment needs, and who actually came. We could partner with them, so their customer would stay within their banking app or within their banking service, and their banking profile with their bank, but they could actually benefit from our products directly from their bank app. So I think that's like a really cool example of where we see like value being added by working together.
Thank you very much, Mathilde. No, very interesting. Also, the product stems from market needs, and that banks are willing to collaborate also and through fintech engagements. I would like to have a short introduction of Revolut, maybe from Rolandas. If you just can explain why Revolut just chose the neobank model, and simply introduce your model to us. But succinct, then we'll go to securities and assets a bit later again. Thank you.
Thanks, Martin. Do you hear me? Thanks for introduction. Pleasure to be here. I guess 95% of people have Revolut now in their pockets, so I don't need to extend my introduction too much. However, I would like to share latest numbers we achieved. So Revolut is very much well described by its mission and vision, what we want to achieve. So we are a fintech, global fintech, where our mission is to achieve the to be a truly global bank. So we currently operate in around 160 countries in one or another way. We recently passed 40 million customers across the globe. And as an example, we just got a license in Mexico. We're working in expansion countries like India, New Zealand, Australia, Brazil, and other big countries. So yeah, that's our mission. And yeah.
Yeah,
that's short.
Thank you. Well, this was short indeed, but this is very good. Just to remind that acting as a bank in the digital space, of course, does not provide branch. This is maybe one of the topic we will discuss a bit later. So some limitation mentioned that potentially 95% of people have Revolut in their pocket. Maybe they know about Revolut. That's certain. I would like to turn towards Maria Tzani from Amazon Web Service, which supports fintech and digital innovation more broadly through infrastructure. Could you tell us a bit more about how AWS operates and what they provide to their customer to upscale?
Yeah, thank you, Martin. As the governor was saying earlier this morning, there's a huge demand for compute power and storage. And we are the compute power and the storage, basically. So AWS, for those who don't know who we are, we provide cloud services to financial institutions of all sizes, from fintechs and startups to large global banks, insurance companies. And as you said, the issue around democratizing finance, that the effect of the fintechs has had in the market, I think the same could be applied to cloud services and how they enable these fintechs to able to grow. The reason for that is that there's no longer a need to invest millions of dollars in your systems simply because you can access the services of AWS, for example, on a pay-as-you-go basis. And that lowers the barriers to entry to a traditionally very, very expensive industry as finance is. So by doing this, we see ourselves really as enablers for the financial entities and particularly the fintechs. In the Baltics, we support more than 50-something fintechs operating in the space. And we're very proud of that. I mean, the startups really and digitally native companies are very, I should say, are very savvy when it comes to digital innovation for obvious reasons. Besides providing just infrastructure, I would highlight that we provide infrastructure that is the most secure and resilient infrastructure. And Mattias was talking about DORA before and some of the emerging risk or changing risk profiles in the financial industry. And what companies of all sizes, fintechs or GSIBs, can do now by accessing cloud services is leveraging the security and the resiliency of, for example, the AWS cloud.
Yes. So security and resiliency, which is part of the DORA requirements, and we'll come back to this maybe later in more details. So we talk about those digitalization of financial services, be it neobank, being payment service providers, be it neobrokers. Fintechs takes many shapes, and sometimes they blend their services or they offer a wide range of services. And in terms of competition with traditional sector as well, how, and I would like to ask ESMA from a securities perspective, maybe here, how is this digital transformation monitored? Risk management perspective that you have on this, and your potential regulatory response or safeguards? Thank you.
Yeah, thanks, Martin. And maybe just a quick word of introduction about ESMA and how we fit with the rest of the EU framework. So you've heard from Mattias about this very important digital finance strategy by the Commission. And so at ESMA, I would say our role is mainly threefold. So first of all, we're responsible for implementing those rules that Mattias mentioned. So this means providing technical advice, standards, guidelines to help firms apply the new rules. The second thing we do is monitoring markets and risks. And I'll come back to that in a minute. And the third, which is also very relevant for this audience, is we're working with national supervisors to achieve convergence. So convergence in the way the firms are supervised, so that we really have this single market within the EU. So I think we've heard from the other panelists that digitalization is really reshaping financial services, and this is happening very fast and has a number of manifestations. So Mattias again mentioned new products such as cryptos, the use of artificial intelligence. And this, of course, brings a number of benefits to users. I mean, for every one of us, it's very, it becomes increasingly easy to access financial services 24 hours a day, 7 days a week from everywhere. So, I mean, you can have a look at your bank account when you're in Lithuania, wherever this bank account may be. You have one-stop shop providing financial services for insurance, investment, banking. So lots of potential benefits. We've heard about AWS providing computing capabilities very easily to financial institutions. But of course, these benefits do not come without challenges and risk as well. So risk for consumers, which I think is a key concern for us today at this conference, but also risk for the wider financial system. Just take one example, you know, these big tech that we have become instrumental to financial services firm. And we know that there are a few of them, mostly from the US at this point. So this has implications, you know, if anything goes bad with one of those firms in terms of data protection, where are those data being stored, being recorded? So all things that we need to be aware of, and this is why we have, you know, this important digital finance strategy and these new rules coming like DORA and MiCA as well for cryptos.
Thank you very much, Anne. So we don't have an InsurTech per se here at the panel, but we have the pleasure to have Tim Shakesby, so head of digital transformation unit at EIOPA. And Tim, if I may ask, what are you working on in terms of identification of new models in the insurance sector, and what have you identified so far that you're monitoring? Thank you.
Thanks a lot, and I trust you can hear me because we weren't able to test the sound before. Yeah, good, great. Yeah, so we've seen quite a lot of change in waves, let's say, across the sector. Our situation is very similar to that of ESMA that Anne just sketched out, and we have a kind of market monitoring role to try and look at the horizon and see what's coming. And we've seen over the last 5 to 10 years quite a bit of change coming, and it's a kind of a mixture, let's say. So sometimes it's really about digitalization of distribution and sort of the app-led distribution and how that can lead to new ways of finding and customers, new kinds of products, new kind of embedded insurance is something we're hearing about nowadays. More parametric insurance, peer-to-peer insurance models. But also just digital distribution, so sort of app-based model for distribution rather than face-to-face going down to the bank branch. And we saw a major kind of impetus to that, let's say, with the COVID pandemic, where it was really important to sort of digitalize these touch points. That's kind of customer facing, but there's a insurance is a very sort of data driven sector, always has been, always will be, I think, by its nature. And there's a lot of opportunity and vectors of change, let's say, when you start looking into the value chain and behind the scenes with the kind of underwriting and pricing models, the data that is driving those models, the kinds of data intermediaries and other entities within the value chain that can enable insurance, and here we see a sort of transformative, quite exponential increase in the amount of data that is available. And thereby, I think this starts raising really interesting questions about the quality of the models that can be used in terms of predicting risks and being aware of the interaction between risks and individual people. So sort of personalization of the products and services. And the use of new kind of technology, and we've mentioned AI, and I'm sure we're going to mention AI again, is one of the kind of catchwords for that in enabling this kind of predictive capacity. That in itself raises some really interesting challenges in terms of insurance, because insurance is at its core about mutualization of risk, so sharing risk. And the more you personalize risk, the more we know about the risk that you as an individual carry, the more that can kind of break that model. So that we have a very interesting debate around those kind of dimensions. I'll say no more.
Timothy. So this is a broad and very great overview of all the topic we can dig into in more details, and it's a great transition to start to talk about AI and then also securities and capital markets more directly. So when it comes to technological innovations brought from fintech, Mathilde already mentioned what Wise provides with its assets service in terms of returns, of competing with traditional banks that are reluctant of sharing any returns on deposits accounts. But now to discuss a bit more in details how AI is already in use, because we talk about data, we need data feeds, and we need data to provide a service potentially more tailored, which potentially may not be suitable, but that we will get back to the topic. AI so far will be fed with data, and data will be fed with data, but so far AI is still used for managing risks. So can you tell us a bit more about how AI is leveraged?
Yeah. No,
Thank
sure.
you.
And maybe the first thing I'll say is that obviously, we always say we're a global technology company, but like I think it's just in the name, like obviously using new technologies and leveraging them in order to make better decisions and also like drive better customer outcome is at the core of what we do. So we've been actually using such technologies and like data science techniques and machine learning for many years now, even before they became in and everybody started speaking about them. So just to give you a couple of examples, like in terms of like treasury management and liquidity management, we use machine learning for a couple of things. So one, in terms of like generating better customer outcome, I can think of is in terms of prediction of transactions. So when you actually send money across border, one big challenge that you have with some of the traditional banking product like SWIFT, for example, is that sometimes it's a bit unclear when the money can arrive. And so something that we've built into our product is a very clear tracking of where your money is and when you can expect the recipient to receive it. And that's really important, not just on a day-to-day basis, but also if you send big transactions. So if you want to buy a house, like, the money needs to arrive at a certain time. And so we use machine learning techniques to actually have better predictability and be able to surface that information to customers. Another example is around liquidity management. So we actually allow customers to send money to over 70 currencies, and they can receive from over 40 currencies. And so we need to make sure we always have enough liquidity within our networks in the right currency to make sure that we can actually answer these needs and process these payments. And so if you think about like a long holiday or a bank holiday weekend, like we need to be able to do the necessary within our treasury team to have the right amount of liquidity in the right place, wherever we think we might need it. And so this is another example where we actually use machine learning techniques to help us better predict where we need that money. And then maybe one last example I can mention is around, combating fraud and financial crime. And they're using machine learning and, using all of the data that we have, as you were mentioning, is a great tool because it helps us, spend the operational resources better, and at the same time, make sure customer experience remains as good as possible without actually compromising on risk. So overall, it actually, drives better customer outcomes as well.
Thank you very much. Now I would like to turn to Revolut to see whether you could just tell us about how AI is also integrated in your systems, and not only about risk management, but potentially about consumer experience that you have so far before we go to prospective other applications.
Yeah, sure. So Revolut just passed 10,000 employees globally. More than half of these employees are sitting within customer support and fin crime services. So actually, we use AI in these two areas quite a lot, and we started using AI already, like before the hype of AI started even. So customer support is still like taking a significant part in our business, but we are introducing more sophisticated AI models, like to be able to solve customer questions as efficient as possible, and we are reaching more than 95% of positive outcomes already. So soon we'll be able to reach cost-efficient way of doing this part of business. Another is, of course, what Wise mentioned as well, is fin crime. So when we turn to the world where AI is taking more and more significant part, so it's very important to be able to fight against fraud very effectively, because users are the ones who must be protected, and Revolut as a global company needs to do it very efficiently. So we're using different AI machine learning models also to try to find out all the fraudulent activities. And another area where we're expanding a lot is translating documents with AI. So as I mentioned, we're operating in many countries, 40 across Europe, 160 across the globe. So we need to approach customers locally. Means we need to have documents in clear, understandable manner in local languages. So we used to have like around 100 employees who do translation. So we see that AI is doing pretty much the same job. Just we need, as everywhere, to check what AI is doing. So another important part that we can't leave all the work to AI only. So somebody needs to be sitting behind and checking the results, adjusting algorithm, teaching new methods, and that's how we could grow together with AI.
Okay, so growing together with AI, but still with human oversights, which is good to know, because AI is very good at predicting, certainly, but should it dictate when it comes to offers and then risk sharing of, for example, insurance, which can bring us to consumer empowerment and protection in fintech. And here I was wondering if maybe Mattias, you would be ready to discuss a little about the AI Act that has passed, and how financial services are considered broadly in that legislation, which is quite extensive and, of course, horizontal.
Sure, I alluded to it a little bit in my opening remarks as well, in the sense that, of course, the AI Act is of a general applicability. It's a horizontal act that applies to all sectors of the economy with a kind of fundamental rights perspective. So it's kind of focused on kind of ensuring that people's fundamental rights are respected. And that's a little bit different from, say, financial regulation, which is very much kind of focused on how we regulate financial entities to ensure that they conduct their business in a certain way, that they uphold market integrity, that they are prudentially safe and sound, etc. All for the benefit of people at the end of the day, but a little bit is phrased slightly differently. Yeah? But the AI Act always has a general application. It targets both kind of providers of AI systems and kind of users of AI systems. Financial entities can be both, depending on the type of AI system you predict. And then they kind of have a risk-based approach, in the sense that there are certain kind of classifying AI systems on the extent to which they may kind of pose a risk to people's fundamental rights. There are certain kind of AI systems which are prohibited, or the use of AI which is prohibited. There are certain kind of usages of AI systems which are considered high risk, and then there are kind of other non-high risk use cases. And the requirements that come with the AI Act are also kind of tailored to that level of risk, with the high risk use cases being the ones that have merited and warranted more attention in the debate so far, rightly so. And that's, as I mentioned, there are kind of two financial high risk use cases due to the fact that AI may condition people's access to certain kind of essential services, such as access to credit and access to life and health insurance. And as a result of that, when AI is used for those purposes, both the providers and the users of AI systems will be subject to additional kind of requirements. Many, if not most of these requirements, will be kind of woven into the existing financial regulation that kind of financial entities, insurance entities and banks are subject to. So financial supervisors, prudential supervisors, and kind of insurance supervisors will have a big role to play in that respect, kind of monitoring compliance. Also with the requirements that come from the AI Act, because many of these are kind of integrated into existing financial supervisory requirements, but not all. So that's a little bit where that comes from. But of course, I mean, the AI Act has that general vocation. It looks at AI from a people's perspective. Then, of course, as kind of both we've heard from Revolut and Wise, and from Amazon as well, Amazon Web Services, AI in finance is being used in other kind of areas beyond access to credit and beyond access to insurance products, which are a little bit more either internal processes of banks or related to areas that have so far not been classified as high risk. Where, of course, we also have interplay with existing financial regulation, which, while not being kind of specifically kind of written with AI in mind, certainly gives supervisors kind of broader, quite broad risk management powers. And there we're also now kind of reflecting on whether everything is clear to stakeholders about the rules that apply. And that's, as I alluded to, will probably come out quite soon with the aim of kind of consulting stakeholders to see what they think in that respect, if everything is clear, or if additional clarity would be warranted, for example, by means of supervisory guidance. So explorative, early days, but still.
Thank you. So still, we are exploring how AI will be used. So this we tackled how the current use cases of AI, but also in the AI Act, transparency is at the core. I also believe that Revolut, for example, uses AI for chatbots for clients to be able to ask quick questions. So this is one thing. Now, clients have to. There is a disclaimer in place for this, so clients know they should they will talk to an AI or generative AI model. And here, to get back to transparency and how to empower consumer, I'd like to have the regulator perspective. So ESMA, in terms of AI, how proactive are you looking to be, and what restrictions do you envisage? Potentially, I think there is a ESMA statement that is out, or yes, so can you elaborate a bit?
Yeah, so I think the the discussion today is very timely because indeed we published a statement today on artificial intelligence. Again, Mattias was explaining what the AI Act is about. The AI Act is cross-sectoral, so covers not only the financial sector but others. And then when it comes to financial services, we need to figure out what these AI developments mean in terms of how activities are being conducted, what it means in terms of potential benefits, potential risk, and whether the rule that we have remain fit for purpose. And I think someone said earlier that the use of AI is not new. This is absolutely true. But I think the way it's being used and the extent to which it's being used and how it leverages on data is really massively changing. So we need to pause again and ask ourselves, are the rules that we have still relevant, and do they properly address the risk? And do they also allow for a proper development of the technology where it brings benefits? And so in securities markets, we see AI applications in the core of the business of the firm. So in terms of portfolio management, investment advice, we also see applications in compliance, risk management. So really wide-ranging. And what's also interesting is that there are applications for us, supervisors as well. I mean, the technology can help us better monitor markets, better assess risk and respond to those developments. When it comes to the statement that ESMA published today, so the statement is addressed to investment firms, and it basically reminds them of their obligations, which remain fully relevant in an AI framework. So the key principle is you need to put client interest first. So you may use AI, but you need to make sure that the use that you make of AI is still in client best interest. So you should not nudge clients to make investment decisions that are not good for them. You need to be transparent on the fact that you're using AI and how it's being used. You also need to have the proper expertise in place within the firm. So this means that from the bottom to the top, you need to have people that understand what they're doing. The AI strategy needs to be owned by the top management. And you also need to make sure that the risk related to the use of AI are properly managed and that you have a proper governance framework in place, including when it comes to data protection.
Thank you very much. Yes, I really like the fact that you mentioned the best interest or the AI being used for the best interest of the clients and transparently. So this reminds me the MiFID framework, the transparency and non-misleading information, and something that ESMA often reminds of, for example, of what does constitute advice. And AI is going to be very much under scrutiny here. Maybe discussing before discussing nudges per se, and then the MiFID framework a bit more into detail, I'd like to turn to Revolut, because here we discuss AI, but you also have robo-advisor, which Better Finance worked extensively on scoping robo-advisors and to assess whether they are very suitable for the clients. We talk about algorithm, AI might come later, but when it comes to how you implement your service, can you present it?
Yeah, of course. So first of all, I would like to mention that AI is nowhere mentioned under any directive related to securities. So basically, until now, yeah, I see like new notifications about AI are happening, but before that, nothing has happened. So basically, what it means that securities companies just can't use AI fully providing services to the customer. Someone needs to sit behind and check what AI is doing if they're using AI. and check the results. So basically how Revolut is using, in this case, AI. Yes, we have robo-advisor service, and we are using AI as an additional service to the main services, which means that basically there are many manual tasks like searching for the best securities, as an example, across the globe, selecting them and giving somehow in proportions later when we provide the service to the customer, in this case, robo-advisor. So what AI is doing, AI is capable of analyzing loads of amount of data, which then is taken by a portfolio manager, by a professional team, which checks the results. And if the results are satisfied, then the results are accepted, and then we can use further to integrate the results according to all the MiFID, let's say, regulation for the customers. So it's not the case that we're allowing AI to communicate directly with the customer. No way. So until it is defined under MiFID, under regulations, until it is defined what needs to be, let's say, disclosed, then we're not doing it. But AI is really a good helper tool for us to make our daily work more efficient.
Thank you very much. As we turn more into now the services that you offer, I would like to discuss a bit more what ESMA also came up with, a consultation, digital engagement practices, which was most welcome to scrutinize, because here nudge can be positive, but it can also lead to gamification to many extents. And we also we also see the limitations that disclaimers may have as either a deterrent or potentially over information. And I would like to have your views here on this, Mathilde, especially regarding the new assets services that you offer. How can you ensure that clients are informed properly? Since, as I understand, it's an execution only, so it does not mandate advice or assessment, appropriateness assessment. So everything is really in the conduct of business, I have the feeling, and often of reminding how to conduct business from the regulator side. So yes, but over to you.
No, thank you. And I think maybe it's, to answer this question, is good to take a step back and kind of think through, why did we actually bring this product to the market in the first place? And, as we discussed earlier, like, we have a lot of customers that actually hold money with us, but because we are an e-money institution in the UK and we are a payment institution in Europe, we actually aren't allowed to pass on any interest that we make on the safeguarded funds that we hold on behalf of our customers. So we hold money in interest-bearing accounts. We, invest them in HQLA, for example, and we generate an income from that we would like to give to customers, because it's actually their money generating it, and we aren't able to, which is actually why we came up with the Wise Interest product. And Wise Interest, as we discussed earlier, just to be clear, like, answers three customer needs. So the first one is it offers a market-leading return to customers. It also gives them an investment product that's actually really safe. So it's still an investment product, and we can dive into this in a moment. So it's still capital at risk, but in terms of like what type of investment we offer, it's very liquid and kind of almost the safest out there. And then it also gives them convenience, in the sense that the money isn't locked away in a term deposit. They don't have to start sending their salary to Wise in order to get that return, like some of the banks do. So they have that convenience. And on top of that, we are also very transparent. So you know exactly what your money is doing. It's invested in, a money market fund that only invests in government bonds or assets backed by government bonds. And at the same time, it costs you a transparent fee, and we are upfront with that. So I think if we think about, all of the good things that digitization and innovation can bring, we need to make sure that in order to generate these better outcomes for customer, we are super clear about what the products are, and we are really transparent about how they work. So customers know that they are suitable for them or not. For us, like, if you think about the type of product that we offer and the type of services, so money market funds, when we started offering this product in the UK, hadn't really been offered to retail at such a scale before. So we were pretty much one of the first firms out there to do this. And so we had to spend a lot of time understanding how to talk to customers about what money market funds are, how can we explain them, how the funds work, what instruments are in the funds, what's the risk, and at the same time, why it might still be a good product for them, and then they can make up their own mind whether or not it's something that they want to do. And so we have a whole team of like designers, researchers, and copywriters that actually works on this full time. And we have learned a lot through this process in order to make sure that, you know, all of our disclaimers, all of our disclosures or onboarding flows are super clear, are very transparent, that they do exactly what they need to do, but then we also don't overwhelm the customer and we don't throw jargon at them that they won't understand. So it's a really fine balance. And coming back to, you know, disclaimers, like we heard it quite a lot this morning, like a lot of people in Europe aren't actually putting their money to work. They aren't actually investing it, and there would be so many benefits for them to do so. And, you know, a very low risk type of investment product like money market fund might be a very good start for them. And something that we've discussed quite a bit before together as well is the fact that, you know, under MiFID or in the regulation, like a lot of disclaimers are very standard. So we would say capital at risk for any type of investment product, whether it's a money market fund or whether it's, you know, an equity product. And I think there needs to be a balance between, you know, making sure that we talk about the risk and customers understand, you know, what might happen to the money if they use such a product. But at the same time, we should still be able to differentiate between different types of investment products so that they don't get scared or, you know, we don't, you know, make them panic once they start using such a product, because they might rather just say, well, you know what, I don't really understand what it's about. I don't want to take any risk. I just won't do anything with my money. And so I think there is a balance that we can find there.
Thank you very much. Which leads us to digital education and financial digital education, I would say, where well, I would say fintech can leverage on that, empower customer. There is a, a discussion about how layer the information. You've mentioned that you have to provide information, and Revolut use AI to translate documents, since some of them or KID must be also provided in the language of the customer. So here, I would like to discuss a bit more when you offer the securities trading. How do you put nudges in practice potentially, or inform clients of how to execute a trade? Because sometimes the more complex, the more deterrent, but sometimes the more triggering, the more a client might execute inadvertently in a way. So how did you build your products to ensure that a consumer can be educated about securities and investing into capital markets?
I must say that MiFID does a very good job here. I work 15 years in this industry, and I know MiFID almost by heart. So such term as gamification is not described in MiFID, but we don't even need to describe, because the product governance, suitability, and the properties requirements pretty much does all the work. So basically, best execution as well, to answer your question. So basically, in order to comply with all these requirements, we need to complicate things for the client so much that they must read and understand everything before they do something. So, and that's what we do. So our main goal as a Revolut is, of course, to make all the products, all the financial services as easy as possible, as understandable as possible. We are doing this also from our side, like adding, for example, stock learn courses, like different courses also, not only related to securities, but other areas as well, like for clients to get familiar with what they are getting. And of course, when we talk about service provision, so there is a lot of requirements and you need to meet them. So going through the onboarding, through the different screens, reading different materials before actually you can get the product.
Yes, thank you. So you appreciate MiFID as in its current state, but talking about execution, ensuring best execution, which should technically be optimal execution, because you have to put in place the best means that you have to execute trades. So you mentioned that gamification is not in MiFID, of course. However, MiFID really based itself on the products to really protect the client. And now in the digital landscape, we are missing the human interaction. Potentially, we have human oversight. You mentioned it, but there are new services, such as Wise Assets, such as the integration of services that Revolut also can provide on that level. And so new services can be also very complex, not tackled by MiFID. So I believe that MiFID can still be improved, and this is why we have statements from regulators, and this is why we have this discussion. But yes, indeed, so far compliance is of course key. I would like now to quickly turn towards FIDA, maybe more in depth, and go back to data and potential next trends. We have a few more minutes before we open the floor for the panelists, for the attendees. Sorry, so when it comes to regulatory challenges of digital finance, should this framework evolve further more than it is just tackled now when it comes to AI on a horizontal perspective? The open finance is set to bring new products to the market, but here how to really, I would say, advocate for stability and ensure, and especially, for example, here on the insurance sector, that the risk sharing is still mutualized. And here I would like to have your perspective, Tim, if you can.
Thanks for that. I mean, FIDA is essentially a proposal that is accelerating certain trends or certain capacities which are already there. I mean, yeah, there already are people offering services in relation to kind of web scraping or in other ways, maybe contractually constructing sharing schemes. Not covering the whole market, of course, but enabling data flows and data flows about you as an individual and how you behave in the world of social media are there. This is something which is happening irrespective of FIDA. FIDA creates a kind of construction around that. It's enabling a kind of framework for that, which you can view it a bit from this perspective that can then create a better kind of more judged controls, capacity for the supervisor and the regulator to approach how that sharing is happening. So in a way, it's giving us a way of managing that sharing. Of course, it then creates some areas where there are real challenges. I mean, we've touched already on dark patterns and the challenges consumers can face in navigating the digital world and doing that in a way which enables them to take sound decisions and know what they're deciding. And dark patterns are and will remain a major issue for us all, I think. Now, in that respect, I think we get to this challenge here, which is about the kind of to the extent to which enhanced data sharing can then accelerate trends around we touched before on mutualization or personalization. That the more data that there is, the more that we know you as an individual and how you behave and what your risk is, the less the less easy it might be to have the right kind of financial inclusion, the right kind of mutualization of risks, the pooling of risks. And so, in the past, insurance had to do this because it just didn't know, and so we're all in a pool together. Now, basically, from data, we can know so much about you that you can be identified as, are you a safe risk? Are you an unsafe risk? And then you start getting this kind of exclusion issue. The only thing I would say is two things. First of all, that issue, that risk, that problem of personalization and predictability and financial exclusion is already an issue. It's already there. So the data sharing under FIDA is might accelerate that, but it's already there as an issue. And secondly, it's a choice. You can decide how you want to approach financial inclusion. We can decide that as societies. We can decide that at the political level. We can decide that as sectors. It's not how you design products, how you mutualize risks, how you price products is a choice. And the fact that you have more and more understanding of risks and you can predict more doesn't require you to doesn't automatically lead to this kind of demutualization, let's say, and financial exclusion. So it's just to put that kind of idea there.
Yes, thank you for this general overview of the risk. Indeed, driving competition, and especially in the insurance sector, should not be at the expense of exclusion. And the data are really at the core of this. When it comes to data, we just scratch the surface of DORA. And here I would like maybe for AWS for Maria to just mention a bit more briefly how those this DORA legislation can safeguard the data aspects of it and yeah.
Thanks, Martin. As much as it's tempting for me to talk about MiFID and MiFID transparency, given my previous life in banking, I'll stay away from that. But
we can make links.
Yeah, before going into DORA, I just wanted to touch on, we're talking AI, machine learning, generative AI. I think we all need to be reminded the enormous compute power that it takes to implement the technology. And again, the cloud services, what can do is allow for firms of all types and sizes to access that technology. And at AWS, we have even developed specialized tips to make Gen AI more accessible, efficient, and more even sustainable from an energy consumption angle. But on DORA, I would say, I heard the term regulatory challenges before, and ever the optimist, I do see, and I have seen DORA since its very beginning as a real opportunity for the European financial services sector in terms of raising the bar when it comes to security and resiliency. And really a catalyst for innovation and investment into best-in-class technology. And I think DORA does that. There are questions around other regulatory initiatives which are cross-industry, like horizontal initiatives that may restrict access to non-EU providers. So allowing choice for financial services institutions in Europe is a fundamental piece of the digital finance strategy. And again, DORA raises the bar, and at AWS, we are convinced about the resiliency of our infrastructure. So for us, it's not really a challenge, but we are fully working towards implementation in January 2025. We are supporting our customers as they implement their requirements. And as it was mentioned before, there will be a new oversight regime for critical third-party providers. And we have always stated that we believe we will be deemed critical third-party providers. So we are working on implementation to be able to continue to serve our customers across Europe.
Thank you very much. So the DORA piece of legislation being extremely important to ensure that the processing, I would say, of all data and its applications are properly safeguarded. When it comes to this panel, actually, we should conclude quite rapidly. So I would just leave the floor open soon to the attendees. But if there is a last remark from the panelists, I would like to take it, either remotely or on site. And since there is no last remark from the panelists, thank you. I would like to open the floor for question. So, Mattias. Yes, here it is.
Very brief question to Maria, if I may. You just mentioned that Amazon Services serves 50 fintechs in Baltics. Is it true?
More than 50.
More than 50. But I am surprised because we have 273 licensed companies in Lithuania alone. Which services are they ever using? And why are you not doing your job properly? Because Amazon services are quality.
Very keen always to support our customers. So I'm sure our teams are working with other customers, but we provide services in the Baltics to many companies, and again, supporting startups is bread and butter of what we do, because it allows companies who may not have the resources to invest millions in systems to start the journey. So
thank you very much.
Thank you. So in the meantime, we have a question that came up online, directed to Wise, it seems. So maybe the opportunity to discuss a bit money market funds, educate on that, and also to have a Revolut's take on this later. So the money market product idea of Wise is very good, especially as, unlike the Giro, which is a neo broker, Wise provides instant access of clients to their money. I would be interested to learn why Wise does not provide interest like, for example, Trade Republic. Is the money market fund structure a substitute because of a lack of a banking license? Also, is this money market fund product available worldwide? So it touches the
very
cross-border
cool question.
as well.
So we have
Thank
a
you for the
happy
question.
customer, which is always nice to come across. So yeah, it's a really good question. I think maybe just for context, my understanding is, so yeah, Trade Republic offers interest on uninvested cash that customers might hold with them. And they do that because they indeed have a banking license. I think our view is that being able to offer, instant access while you actually can also be the one holding units in a fund is a superior customer experience, because you are actually the one that's the unit holder in the fund, which is why we have opted for such a product, and it's available through the Wise account, meaning you can actually keep access to all other products that Wise offers. So that's the reason there. And I touched earlier on why we actually came up with these products in the first place, because under our payments and e-money licenses, we aren't actually able to offer a return to customers. And in terms of expansion, so our team actually is responsible for expansion, which means bringing this product to new markets. So it's exactly what we do. I'm focusing on Europe, so I'm currently expanding into all of the countries where interest isn't available in Europe. And that's something that we might have wanted to talk about before as well, is all of the challenges for companies like us that want to bring an investment product on a pan-European basis. And on an e-money level or payments level, like we are used to passporting, just opening the doors for all European countries. I think with investment, there is still a lot of fragmentation. Marketing rules often aren't harmonized. We have had to work really hard with our fund manager partners to actually convince them to register the funds that we offer into all of the European countries, because we are actually acting as the distributor or sub-distributor, which means that it has to be available for retail distribution. And for them, it's often like commercial decision. And so, we talked a lot about, the Baltics being smaller countries. I think for us, they are really important countries. And because a country is smaller, that means there might be less competition, and it's therefore an even bigger opportunity, I believe, to offer such a product in a smaller country. And so we've had to work really hard in convincing, bigger asset manager that can be quite slow and have a lot of work on to actually prioritize registering their funds in countries in Europe where they weren't previously offering such product. So that's the work that we have been doing in Europe. But we are actually indeed working towards offering our interest products in more countries. Basically, we want to be everywhere where we have the Wise account. So yeah, watch this space.
Thank you very much, Mathilde. That's also showing how fintech, working with other financial firms and asset managers, can bring more services cross-border, indeed. And maybe over to you, Rolandas, on how Revolut also uses money market funds and how to provide returns to customer. From your side?
Yeah, sure. We actually have the same product as Wise described. So we have low volatility money market funds, which was an innovation in 2018, a new product that was invented somehow in the market. So, and my answer is a lot shorter. I mean, why to use money market funds instead of term deposits as an example? Because our product is 10 times better than term deposit. So looking into separate conditions, I mean, you can reach better interest rates in the majority of European economic area countries than normal legacy banks provide. We give a flexibility to the customer to get interest rates on a daily basis, while if they terminate term deposits, usually they lose all the interest. We made this product available to the customers instantly. When they need cash in the shop, they don't have a retail account, they can just move money from money market funds to their account instantly, T+0 instead of T+1. We made this available on our side as well. And yeah, we made this available also in those countries where interest rate is not available at all. So
yes, thank you very much. That shows how fintech is at the forefront. You mentioned settlement T+0. We are only discussing T+1 in Europe, but yes, indeed. Thank you very much to all of you. Sorry, after you. The question is open. We still have some time. Thank you.
Hello, I am Vilma Choné, and I'm European Policy Manager, currently running as one of the EU project leads. My question is about the European digital identity. Currently, we are 10 days when the new regulation, EIDAS 2, is in force, which significant part is devoted for new digital enabler, European digital identity. EU allocated 26 million to create the prototype to test the market, allocated 90 million to test 11 use cases within 4 big, large-scale consortiums to see how it's working. One of the sectors is the financial sector. So my question is, how deep you start diving in this, and have you thought about which new challenges it will bring in European digital market, particularly for the finance sector, and what kind of risk or what kind of values or benefits it will bring for you and for the users?
So this question relates to the onboarding of European citizens, and on this, I would maybe get back to the remote panelists. Maybe Mattias, since DG FISMA is also working on the digitalization aspect and the EID wallets. Can you answer the question of
I think yes. Yeah, no, thanks a lot. It's a very, very good question. Also showing a little bit now what's happening operationally as a result of the kind of legislation that has been implemented. Now, we here at FISMA, we're not directly involved in kind of managing this kind of operational follow-up, but indeed, we believe it is extremely useful that there has been a consortium that's been looking into the financial services use case for payments, I believe it is. And we need to kind of really look at the conclusions from that, now see how one can implement it. But I think that the broader question you had about which hinted a little bit more of the kind of the merits of having a harmonized digital identity approach across Europe, I think that has been kind of discussed quite much in the kind of build-up and during the negotiations of the package itself. And there I think that there's really a clear value in having it, because I think what we have experienced, and that's quite a lot of the feedback we got when we kind of formulated our strategy a few years ago, was that existing approaches have so far been kind of largely, I simplify them, but built on a national basis, and they have proven to work very well within a national framework. But of course, customers and firms in Europe sometimes, if they wish so, have a vocation to go beyond the national remit, and that is the kind of freedom provided to them with a single market, which are freedoms for both firms and people. And there, hence we think it is a kind of a logical and legitimate aspiration to make sure to try to build on these national frameworks to make sure that they also work in this kind of European context. And that is where the kind of framework comes from, to try to ensure that these frameworks can coexist, that they can communicate with each other, that they do work. And that I think it is highly valuable. And then of course there's a range of questions that are being asked and raised, and how you can make sure that this can happen in practice. And that is where I think the kind of experience of this consortia will be extremely valuable. But at the end of the day, this is not the kind of key lead of FISMA. We are more responsible for the kind of more directly applicable financial services legislation, DORA, MiCA, etc. But we of course have contributed to these negotiations and these discussions as well.
Thank you very much, Mattias. I think this concludes it. So thank you very much, everyone, online and on site, and to the panelists especially. So I would like a round of applause to everyone, because you've been extremely insightful.